Welcome to The Explainer. Today we're unpacking a real head-scratcher from the world of high-performance cars and, well, high-stakes finance. We are talking about Porsche, a legend on the racetrack, a total status symbol in the driveway, but on the stock market, whoa, it is a completely different story.
So let's get right into it. Why on earth is a brand as successful and as beloved as Porsche seeing its stock price fall? I mean, on the surface, it just doesn't make any sense, right? Porsche makes these incredible cars, they're raking in profits, and the brand is arguably stronger than ever. So why are investors hitting the brakes? Well, the answer is this really fascinating clash between what it takes to build a legendary car versus what it takes to build a legendary stock.
All right, so if you look at the official story, Porsche will point to a few familiar challenges. You know, the kind of things facing the entire auto industry right now. And to be fair, these are legit problems.
So you've got weakening profit margin forecasts. That's a big one. Then there are these 25% U.S. import tariffs jacking up costs. Add to that a slowdown in the super important Chinese market and, well, a pretty rocky and delayed transition over to electric vehicles. Yeah, these are all serious issues for sure. But here's the thing. They don't tell the whole story. Not even close.
To really get what's happening here, we have to dig a little deeper. The real problem? It's not just about tariffs or some EV delays. No, it's a fundamental conflict, an identity crisis. You could almost say there's a battle being waged for the very soul of Porsche.
Think about it like this. On one side, you've got the car enthusiasts, the loyal customers. What do they want? They want that iconic flat six-engine sound, that pure driving pleasure, that racing DNA. It's all about the experience. But then, on the other side, you have Wall Street. And investors? They're not so concerned with the engine sound. They want to see EV market share, they want to see strong ESG ratings, and they want a crystal-clear growth story that points to a rapid transition to electric.
And this quote just nails it. The root of the problem is the gap between investor logic and customer logic. Porsche is trying to please both and is stuck in the middle. They're trying to be everything to everyone, right? Keeping the old school fans happy while chasing the future for investors. And when you try to please everyone, well, you often end up pleasing no one. You get stuck.
Okay, so if Porsche is stuck, what does a winning strategy even look like in this space? Well, for that, let's take a look at their biggest rival, Ferrari.
And when you put the numbers side by side, wow, it is stark. I mean, look at this. Ferrari sells just a tiny fraction of the cars Porsche does. We're talking around 13,000 units versus 300,000. But the average selling price, the operating margin, it's just a whole different universe. Ferrari isn't playing the volume game. They're playing the value game, the exclusivity game. And this chart really drives the point home. Just look at the estimated profit per vehicle. It's absolutely insane. Ferrari makes over 5 times more profit on every single car it sells compared to Porsche. This isn't just a slightly different strategy, you guys. It's a completely different business model. You could argue Ferrari is a luxury goods company that just happens to make incredible cars.
And this is the heart of the problem for Porsche. This is what we call the volume trap. Their high-volume strategy, especially with the SUVs like the Macan and Cayenne, it puts them in this really awkward, difficult position.
It's like a negative feedback loop. Check this out. First, they chase mass-market volume with their SUVs. This forces them to compete with absolute giants like BMW and Mercedes. The problem is, those guys are masters of scale. They're way more efficient. So what happens? Porsche's margins get squeezed, and at the same time, the more SUVs they sell, the less exclusive the Porsche brand becomes. So they end up in this awkward middle ground, not exclusive enough to be like Ferrari, but not efficient enough to compete with BMW. They are stuck right in the middle, and it is the worst place to be.
So what's the answer? Well, here's the crucial point, and it might sound a little counterintuitive. The path forward for Porsche might actually be to get smaller, to shrink in order to grow. Let that sink in. This would mean a massive shift, a total change in focus. Instead of making all these different models, SUVs, sedans, sports cars, they would recenter the entire brand around their most iconic product, the 911. The strategy would flip from maximizing sales volume to maximizing profit per unit. The goal wouldn't be to compete with BMW and Mercedes anymore. The goal would be to compete with Ferrari. And why would this work? Well, a 911-centric strategy is incredibly powerful. It unifies the brand story around its strongest symbol. It streamlines costs. It lets them create a whole range of models, from an entry-level 911 all the way up to insane GT models, justifying higher prices across the board. It's like how a luxury brand has its core handbag, and everything else orbits around that. And here's the kicker. This makes new tech, like a 911 hybrid or even a full EV, feel like a natural evolution of the Legend, not some separate competing product line that just confuses people.
Okay, so what does this all mean for us? For anyone watching this story unfold, whether you're an investor or just a fan, what are the signs? What should we be looking for?
Well, here are the potential buy triggers, the big signals that a turnaround is happening. Number 1, any announcement that they're reducing SUV production. Number 2, a clear, stated strategy to go back to a 911-centric model. 3, a new policy to deliberately limit production to boost that feeling of exclusivity. And maybe the biggest one of all, a public declaration that they're targeting a new profit margin of 25 to 30%. If you see any of those headlines, that is a huge flashing sign that Porsche is choosing the path of value over volume.
And at the end of the day, that's the fundamental question the company has to answer. Will Porsche choose to build more cars or build more value? It's a choice between being a premium mass-market brand or reclaiming its spot as a true luxury icon. And honestly, the choice they make is going to define the future of this legendary brand for decades to come.